Sanjiv Bhasin joins in on the show right now. Sanjiv, hi, morning. It's getting a little worse out here. I mean, when was the last time L&T fell that 6% or so? And I'm not even getting into other individual names here where the selling was excruciating. But what's the strategy right now, Sanjiv? Do you just throw in the towel and sell into the market, or just wait patiently because you see some recovery in store?
Yeah, good morning, Aisha. What a week. Last Thursday, I was with you in Mumbai and we were hitting new highs, and I told you, take some money off the table. Well, 1 week is history in the stock market, but now I can safely say by Tuesday, we will be past this whole fear psychosis on elections and numbers and so on. So start, if you have raised cash, this is the time to start deploying. Yes, you are right. Like I told you, L&T generally sells off after its numbers. Now, we all know the Red Sea crisis has taken its toll. The company has always sounded cautious but delivered, over-delivered. However, see, there are three things which are going brilliantly. One, the US unemployment rate rising means bond yields fall, the stocks market do well. Now there is more than 2 rate cuts on the cards. If yields fall, inflation is under control, then Indian rate cut could be also on the anvil, which is very good for banks. Three, the capex cycle is doing extremely well. Four, IT outsourcing is picking up because everyone is attuned to AI and there is a lot of humbug over there. And FMCG is raring to go back. So some of parts, from what I gathered yesterday, there were two hedge funds which got liquidated in the last 3 days for whatever reason they were, and that is what accentuated the fall. But there was a lot of froth at maybe 22,800. Similarly, now we are in an oversold territory at 21,800. So this is the time to pull up your socks, ignore the fear, and buy the stocks which you most wanted to. And hopefully by Tuesday, Wednesday, we should be back to normalcy as far as the VIX goes, and then we will take it with global cues.
So let's highlight your most wanted list. What is it that one should be shopping once this weakness is done with?
See, Aisha, two things are irreversible. One, the capex cycle, the demand for power, thermal power, and coal. So, Coal India becomes my best choice. Merchant power is going through the roof. They are making 25% of their sales over there. They are a debt-free company. You cannot get it at 440. So, I think this is the best buy here. 520 is my target on Coal India. Vedanta is another superlative play. Today, look at the across the board: bauxite, nickel, copper, all trending towards new highs. And I think the biggest play over here is Vedanta. The demerger of the 6 companies will see by the end of the year a target of 750 here. So don't miss this opportunity. Commodities are giving a very, very good entry point. Coal India, Vedanta are my top picks. You can add an Alco there. And last but not least, I would say Engineers India. Engineers India is the electrician to all of the OMCs, the hydrocarbon, electrical cycle, all belongs to it. This is a debt-free company. The capex is just starting to materialize, and their PMS side is doing extremely well. Even if it doubles from here, it will still look cheap. That is Engineers India. So 217, 218 is the entry point. I would look for a target of 275 initially, and maybe even more once we see more color on the capex side expanding more.
Okay, fair enough. Meantime, let's also get in your take then, Sanjeev, as to the kind of reactions that we're seeing. For example, we were discussing L&T, not all too bad, but the stock being punished, or a PB FinTech as well. It was a pretty solid set of numbers, but the street didn't quite reward it. Is that inherent nervousness in the market? Is that what's causing it? And if so, what's the approach to the large caps?
Yeah, good morning. So, Avan, it's clear that these are overowned stocks by FIs and institutional, local, and any bout of good news will see selling. However, you missed the fine print. Honda hit a new high yesterday, and so did the other auto stocks. So, I think there is a disconnect in the sense that capex stock had run up far in excess of valuation, and that is what you're seeing some sort of correction in. But I still think that on declines, L&T becomes a must-have in your portfolio. They clearly indicated that the Red Sea has taken its toll, and that means 25% of the engineering contracts in Middle East may be under pressure for the time being. However, look at the other brighter side. I think the FMCG stocks, when did you see Marico lever rise in tandem to 8899%? Those are very, very underowned, and those are looking very good. Commodities as a basket is looking very good. I just alluded to Coal India and Vedanta. I think those are looking very, very good. And some of the banks now, HDFC Bank, for all its negativity, is already pricing in the worst. So I think it goes ex-dividend in a day or so, on the 15th. This is a time when you must accumulate a bank like HDFC. It is less than 2 time price to book. And I think the synergies of the merger are playing out well. So for the long-term investors, this is your opportunity. Do a SIP or outrightly buy. But you could be getting very good opportunities where the underlying fear is dominant, more so because of the sell-off.
Okay, HDFC Bank for the long-term players, 1447 is a good entry point. Some of the other stocks which are going to be in focus today, and Tata Motors, not just it's going to report its numbers, but there's all the buzz in the market that they're looking to spin off the NBFC arm and merge it with Tata Cap as well. So that's one stock definitely which is going to be in focus. Lot of brokerage reactions like we flagged off earlier coming in on SBI. There's BPCL which reported its numbers. The net profit has seen an uptick of 24% on a sequential basis. Escorts, Macquarie has come out with a note. They've upgraded it to an outperform from the earlier neutral, up the target price as well. Sanjiv, other than FMCG, would you say that it's now time perhaps to even broader your exposure to the rural recovery theme, and maybe Escorts could be a name that could be looked at?
Yes, Aisha, Escorts has been one of our topics from 1800 levels, and the Kubota buyout meant that they are now getting more and more market share from Mahindra, and they are just 2-3 big players. Mahindra the largest, and Kubota now. The focus here has been to make it debt free, and arguably, rural incomes have been very, very strong, and I think tractors are a very, very big conduit to that, like you just pointed out. So yes, I would definitely look. But the whole market is missing the bigger theme that autos are a sign that prosperity is there in rural incomes. That's why you are seeing Tata Motor, Hero Moto, M&M, Maruti all hit new highs. It is telling you that the base effect of consumption and spending is high. How can banks go wrong? They are the largest lenders. So I think that the pessimism on certain stocks as sectors has overdone. Some of the banks, large cap banks, are looking very good. HDFC, ICICI, and of course some of the PSUs. But the real killing will be in the commodity stocks. So Coal India, Vedanta, Nalco, SAIL, Tata Steel, this basket is looking very strong. From their highs, they've not even corrected 5%. And if this market trends, which according to me on Tuesday, fingers crossed, then these stocks are headed to new highs.
Sanjiv, great to have you on the show as always. Let's hope for a better next week for the markets.
If you like this video, then like, share and subscribe to ET Now.